We're going to be going through 10 scenarios of the IDR setup. And by the end of this video, we're going to have 5 key takeaways. We're going to have a win rate and we're going to have a risk to reward. So stick till the end in order to find out what are those key takeaways and what's our stats. This is the backtesting template we're going to be using. This is Notion. I highly recommend that you guys use it. It's a really good software. This is where we're going to be logging in our trades. This is the template. By the end of this video, I'm going to be sharing this template and we can see our risk to reward, and I'm going to share the risk to reward. I'm going to share the win rate. The strategy or the entry techniques we're going to be using for this IDR, we're going to use it on the 5 minutes time frame. Of course, we're going to have to wait for a close above or below the IDR after 10:30 New York time. When we see the close above or below, we're gonna mark the imbalance and the fair value gap. When we retrace back to it, we're gonna go to the lower time frame and we're gonna wait for a break of structure. When we see the break of structure, we're gonna enter on the fair value gap, the breaker, or the old order block. We're gonna see everything now in examples. So we're gonna do 10 trades. Today is Friday 20. We're gonna go 2 weeks behind from Monday to Friday, then Monday to Friday. We're gonna go back to Monday 9th, okay, and we're gonna put the IDR. This is the indicator you wanna be using, okay, and then we can go into the settings. We just want the regular session. We don't want the after and overnight because we're gonna just be testing the New York Open, and we don't want to see those STT lines. So that's it. Now this is the beginning of the session. Okay, we're gonna have to wait till 10:30. After 10:30, we closed above the IDR right here, as we can see. Okay, what does our strategy say? After we close above the DR, we have to check the fair value gap and the imbalances. Okay, this is the first one. Now we're gonna have to wait for a retracement back here. Let's see if we're gonna get that or not. Okay, the price retraces back here, but it keeps on going. Okay, so even if we came back here and we went on the lower time frame, we're gonna have to see a break of a short-term high, but we don't see that. So this is not a trade. Okay, there's also right here this huge balance. Okay, let's go to our lower time frame. We can see short-term high here gets broken. Okay, we went above it. There's an order block right here. We went below it. We took liquidity from this low. Okay, now what I want to see is a break of this short-term break of this short-term high. If we get that, we're gonna enter on the retracement. Okay, we did break above it, but not with a big intensity. Okay, we want to see big candle close above it. Okay, that didn't happen. We went. Okay, and we went below it, which is weird because, as we know, when the price closes above the DR, it should not close below it for the session. But we can argue that the session has been over by the time it went below it, 15:45. So we can argue that the session has been over, but it did close below it. This is the first trade. There was no trade, which is pretty good because we would have probably took a loss if we had a trade. So let's move on to the next day. This is day 2. Let's see what's gonna happen. 10:30, we close below. Okay, now what do we have? We have this image from here to here. Okay, we have a fair value gap and an imbalance here, and we closed below, so we also have here. And as we can see, we traded right through it. Let's go to the lower time frame. Okay, we broke right here. This is the 5 minutes. We retraced, and we can actually take our trade from this area. As we can see, came from here, we went above it and took liquidity, and then we broke it in an impulsive way, and then we retest this area. Okay, we retest this area with also a fair value gap right here. Okay, so now what do we have? We can actually break it down. What do we have? Below DR, we have liquidity taken. We have a break of structure. It's not break of structure, but a short-term low being taken. Okay, in an impulsive way. We have a retracement to a fair value gap and a breaker. If you haven't seen my video of the breaker, go watch it. I'm gonna put the description and I'm gonna put the video in the description. As we can see, we came here, we went above it. This becomes a breaker right here. So we have a pretty good confluence. So we can put the trade right here. The only thing that I don't like is that we have a big imbalance above it. But if we're gonna go lower, then it should not be filled right now. Our target is gonna be below this low as a first partial, okay, and then below this low as the full trade. Let's see how this plays out. Opa. It doesn't play out so good. So we can log it in here. Position short, we know our setup, we're gonna put it, it's not a win, RR minus, we're gonna be risking 1%, -1, and this is Tuesday. I'm gonna be filling up those because today we're interested in the return, risk to reward, and our win rate. So the price continued up to our big imbalance right here. I'm gonna go back to the 5 minutes time frame, and as we can see, we came here and we filled this imbalance. Okay, we need the price to go below this area, and we do. If we want to go lower, okay, we should not go above this, as the DR concept is. If we close below, then we should not go above it. Okay, but if we want to take a trade, let's say right here at the retracement, we can put our stop loss here, and we can put our take profit here or here. Okay, although this is a powerful area because we have a double imbalance, but what I see the problem is, in that case the DR is not helping us. You know, it's just a normal ICT setup. This DR didn't help in any way right here, unless I want to put my stop loss up here, and then my TP, the only thing that makes sense is to be below these lows. Okay, this is 1-to-1, it's even not a good trade. So to be honest, the DR didn't help in any way here. Okay, at this point, this trade, to be honest, for me, I would not take anything because we are actually at like equilibrium, you know. There's many things that goes against our bias, but let's stick to our strategy. So our strategy is close above or below, mark the imbalance and the fair value gap. Okay, this is the imbalance and the fair value gap. We're gonna go to the 1 minute right now and enter on a fair value gap after a short-term low has been taken. Okay, right here. So let's say our entry would be here above this, and we're gonna target right here. They have these fair value gaps, but we also have this area that the price could react from. First partial here, and then we're gonna take the second partial here. Okay, let's see. Okay, we hit our first partial and then back to break even. We're gonna put this as 1.1 risk to reward. Okay, yeah. Once we take our first partial, we move to break even, which means that we're gonna put this as 1%. Okay, so this is on Tuesday. But to be honest, in this trade, the IDR didn't help so much. This doesn't have anything to do with the IDR. So let's move on. This is market open. We're gonna see if we're gonna close above or below. We closed above. We have here fair value gap. Okay, and we also have a small one right here. Okay, so we're gonna wait for the price to retrace, but I also want to see the price come and retest this high of the IDR. Okay, let's see if this is gonna happen. We came here, we go to the lower time frame. Okay, we took here a short-term low, we took a short-term high right here, but the market structure is still, as you can see, bearish, you know. So let's see. This is a valid break of structure. Okay, but we don't have any fair value gap, we only have this order block. We didn't retest it. Gonna wait for the retest. Okay, it came right to the DR high right here. Let's see now. We went above, we retested this area. I'll take my trade around here. My stop loss below this, and first partial is above this high, because definitely we're not gonna do less than 1-to-1. Can go a little bit higher. Opa. And as we can see, this trade played out. We didn't go below, and we reacted from the DR. So okay, this is a good trade. 2.5, it should be above this high, so something like that. 2.57, we're gonna log this in. It's on Wednesday. Okay, going through Thursday, we broke above. Okay, our fair value gap is right here. We trade right into it. Let's go to lower time frame. Okay, we take out this short-term high, and we're gonna take our trade from this area. We're gonna put it below. We're gonna target this right here. As you can see, we didn't get an entry. Even if we put it here, we didn't get an entry. We didn't get an entry in any way. So far, no trade. Let's see if we're gonna come back. Oh, and we come back right here to this imbalance. Depends what time of day is it. Almost end of session. So we're not gonna take this trade. Moving on. We didn't close below. We didn't close. If we closed higher, we didn't close below. We closed below, and then we closed higher, but this was at the end of the session. Okay, on Monday also we closed higher, but we closed below it at the end of the session. So far it's the DR is doing its job, but as we can see, it's not a strategy. It's just a confluence that we can add to whatever strategy we have. Okay, so we closed above, we retraced back. I don't see any imbalances right here. Okay, we should stay above, we should not go below the IDR. But as we can see, we don't have. Okay, now we can have an entry. This is a fair value gap right here. This is an imbalance right here. Did we trade right into it? We did, to be honest. Let's go back. Okay, even here we have this fair value gap on the 1 minute time frame, and this is a beautiful break of structure, and this will be an entry, and it will be below this low or below this low. Let's keep it here, and we're gonna target the highs. Gonna be taking partials above every high. So above this high, we're gonna take a partial. This is high formed later. So we're gonna be taking above this high, and above this high. Okay, let's see if this trade gonna play out. Okay, so far so good. We can see that, let's say if you're at 1%, you took here 0.5%, you took here 25% above this high over here. Okay, and straight to TP 2.6 risk to reward. Nice, that's a great trade. Okay, let's keep going. 10:30. Are we gonna close above or below? We closed below. Now we have this right here and we have this imbalance right here. Okay, let's see what's gonna happen. Are we gonna come back to it? We did come back here. Okay, we did come back here. We need to wait for a shift, which is right here. Okay, and now we want to see a retracement. But if these lows got taken out before we come back, then it's an invalid trade. As we can see, all these lows get taken out, so even if it comes back, we're not gonna enter. Because why? Because our objective is already taken. Like, this is our objective, is the liquidity below this area, and it was already taken, so we cannot take the trade. Let's go back to the 5 minutes. Yeah, as you can see, let's see if we're gonna close above it. This is our imbalance right here. We broke this right here, but we are already out of session, so no trade. Okay, this is Tuesday. If you can see an expansion, we are inside the IDR. We do not see any break above or below. As we can see, nothing is just consolidating. Okay, nothing, no trade. This is Wednesday. We broke below, and as we can see, from this high to the low, then we broke, took liquidity, and then we went below it. Then we have to see the price come back here with a confluence of fair value gap, an order block right here, this breaker. There's a lot of confluences on this trade. Let's see if we're gonna come back to it. Although we already took liquidity, yeah, we do not retrace. And this is gonna happen, right, guys? You're gonna be okay with it. It happens. But let's see if we extend this, if it's gonna retrace to it later on, because as you can see, there's some positions that haven't been closed. Okay, let's go to the next day. Here we go. We close below. We retrace back to the IDR right here. But we have a fair value gap right here. Okay, let's go to the lower time frame. We went here. There's here a fair value gap. There's here a fair value gap. Okay, so we want the price to come back here, basically. Okay, let's see it on the 5 minutes. We want the price to come back here. Okay, it taps into it, but in an impulsive way. So let's wait and see if we're gonna get a rejection. Okay, we go higher to this fair value gap right here. Are we gonna see? We need to go below this. We went below. We retested. Our stop loss is here, and our TP is gonna be below this low first, and then the second one. Okay, whoop, straight to TP 1.15. Are we gonna go lower? Okay, we can go lower. That's 1.5 risk to reward. Let's log this in. Thursday. Okay, let's see if we get something else for the rest of the day. Okay, sometimes TradingView does that. We have all this area that's with imbalances. In the higher time frame, it will be more visible, and we retest here again. Let's see, we take out this low. If we retest this, we can have an entry right here. Okay, although we just broke structure right here. If you can see, we broke to the upper side, and we already took liquidity here. So we can argue about this trade, but we took a short-term low. Are we in a fair? This is the problem with TradingView. It shows you everything. Let's see here. We are in imbalance. We went to the lower time frame. We took this short-term low. Okay. And an okay candle. So we can put our entry here. Okay. Actually, it should be around here. And we can target this area over here. But as you can see, guys, this is not a good trade. Not good, not enough risk to reward. Let's see how this plays out. Definitely it's a loss, so -1. I'm trying to show you everything, if it's a win, if it's a loss. This is the rules that we spoke about, and I took this trade even though it looks like it's not gonna be a win, but these were the rules, so we're gonna stick to it. Okay, let's see what happens next. We have this fair value gap right here is 1220. So the thing is, we are below the IDR and we should not close above it. Okay. We're not gonna enter any trade unless we break below this. Okay, as we can see, we have a big break of structure to the upper side. We have a retest. Now we're not gonna take a counter trend retest, the counter trend of the DR. That's not what we're trying to do, but I would enter right here. Yeah, because as you can see, guys, this is a perfect break of structure. And those retests and this fair value gap. Okay, and this order block right here. So this is a good trade, but not within our rules. We want to take with the trend. We broke below it, so we're gonna take with the IDR. As we can see, we didn't close above it, but we took liquidity. So if we had our stop loss somewhere above it here, we would have been taken out. Okay, so we didn't close above it, but we took the liquidity. So this day is finished. Let's see. Friday. We broke above. Okay, we have this area. We have this area. See if we're gonna get a retest. Pick up structure 1, 2, we go up. We need to wait. We can argue that this is a retracement into the fair value gap right here. So if we put our entry right here, our stop loss below this, okay, we can target this high. We can target this high, and it got hit. So 1.8. That's a great trade. Came back and we went higher. Of course, you could have taken partials here and then partials here, and then waited for the imbalance fill. But that's a great trade. As you can see, we broke in an impulsive way. It gave us a really nice retest and went higher. Oh, where did it go? What did we talk about? It didn't retest this area, so it came right back into it. Okay, this is a really nice place to look for shorts, because this is the retest that we were waiting for. This is out of session, but let's just see what is happening here. I would like it to... Oh, so this is gonna have to wait until the market open. I would like to see a break below this area, okay, and then a retest to take shorts. Okay, as you can see here, this is what we were waiting for, to be honest, the retracement to this area. Okay guys, this gets us to our last trade. So the stats that we got, I'm gonna be sharing them right now. This is Notion. Okay, so within 10 trading days, we got, let's change the trading days. We got 71% win rate and 7.4% return. Risk to reward, which is the return, is 7.4, risking 1%. I think these are pretty good stats. There were many trades that were avoided, which is really good. This is the system that you need that can actually make you avoid the losing trades. Okay, and that makes you trust the system and follow it even more and more. Now we're gonna go to our 5 key takeaways from the DR IDR. There's something to note. We did not check the news days. Okay, so this could affect a little bit the stats and the performance of the DR IDR, because as master says that we cannot use it in with the news days, but news are usually around 2:30 and we are trading at 9:30 open. Okay, number 1, we always have to wait till 10:30, which limits our trading setups that we can find, because to be honest, the market open at 9:30 New York time has the most volatility. And in order to use the DR IDR, we have to wait till 10:30, which is 1 hour after the market open, which could make us miss a lot of the big movements that happen at the market open. So the first takeaway is timing. We have to wait for 1 hour after market open. The second key takeaway, it can stall and not close above or below the IDR, and then we're just stuck in a range. Okay, and then we have no confirmation. So it can have two effects. Either it can help us avoid taking losing trades, or it can limit our chances of taking a trade inside of the range. Okay, third thing is that we have to understand it is not a strategy. It is just a confluence. As we are using it right now, it's just a confluence. It's not a strategy. Okay, we can just add it to our checklist, but that's all. Okay, it gives a really high probability, but that's all. It cannot be a strategy on its own. Key takeaway number 4, it cannot be traded on news days, which is on indices. News days are almost 2 times or 3 times per week, and if you cannot use it 2 or 3 times per week, then it limits our opportunity, to be honest. So this for me is a downside. The 5th key takeaway is that it's hard to counter trend the DR IDR, because you know that it closed above, but sometimes there are like really good setups in order to take in the opposite direction. So this also can be a good thing and a bad thing. It can avoid you from losing trades, but it can also make you miss so many trades, because we have some days where there's a distribution, we go really high, and we have some days where we just take liquidity above and then go back into the range, and this could be a chance for us to take a trade. Those are the 5 key takeaways I took from the DR IDR. It could be used to our benefit, and it could make us miss so many opportunities. It's up to you guys. If you want to use it as a confluence, don't use it as a strategy, please. Maybe in the future, if they release or there's some more data to use that strategy, I don't know. But for now, you can just use it as a confluence, and you can backtest it more. I'm going to be sharing this template so you can log in and put all the trades. Please, when you're backtesting, use this template so you can know your win rate and you can know your return. Okay, it will give you more confidence when you go to live markets. I hope you enjoyed this video, and I'm going to see you on the next one.